Well, Vodafone subsidiary Safaricom reported a 16% rise in total revenue to 124 billion shillings. 18% of this came from the telecomms company's money transfer system, M-Pesa. Safaricom also reported a 47% jump in its pre-tax profit to 25.5 billion shillings. And joining us live from Nairobi now to unpack the numbers for us is Safaricom's CFO, John Tombleson. Thanks so much, John, for joining us this afternoon. Well, as I say, 47% jump in pre-tax profit. We've seen revenues climbing 16%. It seems to have been quite an impressive year for the company. So take us through the year that was.
Yeah, so I think all of our product lines are growing. So not just voice, but our non-voice products like M-Pesa, SMS, mobile data, fixed data are all having really good growths. And we've just got the pricing and the product quality right.
Let's take a look at John, sorry to interrupt, but let's hone in on the kind of growth you've seen on the non-voice revenue side of things, because revenues there up 29% and largely driven by M-Pesa. So what kind of traction are you still able to garner moving forward, or are we close to reaching saturation point here?
Yeah, we've got 88% of our customer base now registered for M-Pesa, and that's 17.1 million people. However, only, and it's not just only, but 10.3 million people are actively using it every 30 days. So we still have good growth as the registered customers start actually using the customer on a monthly basis. And we're also seeing an incline on the number of transactions each one of those registered customers are doing.
It really underpins your strategy to diversify and diversify your revenue channels specifically. So what kind of stride and innovation are we seeing coming through from Safaricom moving forward?
Well, the year we just passed, our biggest innovation was the launch of M-Shwari. This is the ability for our M-Pesa customers to make micro savings, micro loans, and it's in partnership with the Commercial Bank of Africa. And this is an example of one of the deepening of inclusion programs that we have, and it's not the last. And one of our strategies in the company is to really embed innovation. So the entire company is always looking at new ways and new opportunities.
This with customers that already sit on your customer base. John, let's take a look at how you're trying to incentivize customers your way and to grow that pool even further, because a severe lesson was learned in the past that price cuts was not necessarily the way to go.
Correct. 18 months ago, Safaricom pulled out of the price war and put what we believe is a sustainable price, which, by the way, is the cheapest retail pricing in sub-Saharan Africa. So not only do we have the cheapest retail pricing in sub-Saharan Africa, we also have the cheapest MTRs in sub-Saharan Africa. But this is still sustainable for us, as you can see from our numbers.
How are you getting this right, and what kind of pricing power do you currently hold?
Well, with I think it's 64% of the customer base in the market, we're still achieving something like 78% of the minutes in the market. And so one would have to assume that we've got the pricing right, that we've got the product right, that we've got the coverage on our network, that we continue to be able to invest in the experience for our customers, and that we keep innovating. And we're really seeing that on things like our brand scores, on our customer delight indexes, and our reports back to the customer care, is that it's not just about price, it's all about the holistic service that we provide.
So if we're talking holistically, then let's put the spotlight back on the voice side of things, because this does make up, what, 2/3 of your revenue. You've seen 13% growth on that front. What's happening on the voice side of things at this stage, and how are you looking to ramp up that growth even further?
13% is the full year growth, and if you recall, we put our pricing up 18 months. So this year we had the first half was a price differential the first half we had like a 4 shilling retail price versus last year a 3 shilling. The second half was a 4 shilling on 4 shilling. So the underlying growth for the second half was 7%. And that's the type of number we should look forward to go forward, the 7% on voice. And the growth is coming from more users coming into the market. In Kenya, there's 43 million people, of which 53% of them are under the age of 19. So that means that every year you've got 1 million new adults coming into the market. And meanwhile, the middle class 5 years ago was probably 5% of the population. Today it's more like 17, 18%. So as that grows, so does the opportunity for voice grow.
Oh, it's one thing getting more users online, John, but the challenge for telecoms operators, wherever you sit on the African continent, is getting those ARPU levels up as well. So are you seeing indications of that happening in tandem?
We were not considering moving price up, so we're not going to see an increase in pricing. What we are seeing is incremental growth in usage, so the ARPU is climbing on that basis, plus we're seeing incremental growth in customer numbers.
Mm-hmm. Let's get your assessment of the competitive landscape right now, John, because we know that when Bharti Airtel came into the market, it caused quite a stir to the extent that it triggered those price wars that we were talking about earlier. Now, what sense are you getting of the landscape now that the dust seems to have settled somewhat?
I think it's not just Airtel, it's put pressure on Orange and on ESA, the U brand, to really go for their customer base. And their pricing has been designed around going for the customer base. However, the numbers that we've seen reported from both three entities in various formats is that they're not making money. So at some stage that needs to change, and we would like that to change for them. Because we do need a healthy marketplace. Yeah. But it indicates that sometime along the line they have to put prices up. In fact, Airtel did that in December, and they still have their prices at that level, whereas the ESA brand put their pricing up 3 days later, and a month later had to remove it because they lost their customers, because their price became close to Safaricom's. At that point, the customers said, I'm going back to Safaricom.